And welcome back to Bitcoin Advisors channel. I am happy to be bringing you this cryptocurrency video from a beautiful Westlake Village, California. I'm going to jump right into the charts, starting out with the S&P 500, which is possibly putting in a bit of a top and some hidden bearish divergence. And I just wanted to bring up this theory called gap theory, which says gaps like to get filled, and gaps occur in price action when the market closes. Futures markets close every weekend from, call it Friday at 3 p.m. to Sunday at 3 p.m. and a gap in price action does occur. And we have a gap on the S&P, which is down here, which I think is pretty likely to get tested. And the theory with gap theory, is gaps like to get filled. They either get tested and you see a rejection, so price action comes back, confirms, hey, that price action was either correct or not, right? In this case, it was an upwards move. So if we're going to continue to see upside continuation, you want to see a higher low in this region and then pretty much a higher high, and that's a bit of a trend reversal. However, if you shoot through the gap and then retest it, right, and then have some follow through to the downside, that confirms, downtrend continuation. So we have a bit of a similar situation on the CMEs right now. And this is the daily time frame. I'm going to put it on the 4 hours so you can see the gap just a little bit better. And there's a gap coming in at 16.3. And I do think that's going to be a major pivot actually on the market. 16,300. Essentially below there, bad or bearish, right? Above there, you can look at revisiting the top side of the range at 16.8. If we can get a, let's see, 4 hour back above there. Funny, spot price action and CMEs are doing something a bit different here, but essentially, a 4 hour back above 16.9 on CMEs likely does get us a pretty good move. Let's see where the lower high could potentially come in at the 382, the 0.5, all the way up here. And that would be a retest of support that was broken right here at the 618. So that's, the threat of an upside move is still potentially there. Definitely on CMEs. Let's check out spot price action real quick on the 4 hour. So we did break back down into this box, and I do believe yesterday we said it. Well, we started out saying last week on Friday that 4 hour volatility got extremely pinched, and the expansion from this phase was likely to expand in the direction of the trend, which would have goose the odds in a run at the bottom side of the range, and that's pretty much what has now happened. And so it's bounce here or not, right? So if we're going to reverse here on the 4 hour time frame, this will confirm as a lower low, but kind of a pair of lows, perhaps a double bottom. And on the 4 hour time frame, that is a slightly higher low. So just shorter term time frame, potential bounces, bull traps up at about 16.5 to 16.4. And to reverse the trend, essentially when you see these descending triangles like this, which descending triangles have about a 70% chance to break to the downside. What am I trying to say here? Did we break it on the 4 hour? No, we did not. What I'm trying to say is essentially if price action does come back and close above this trend line, that'll be your first warning sign of a bit of a bear trap and a run back at the top side of the range, which is going to be at 17,620. And you will have call it two drives of hidden bullish divergence, where price is making lower lows and RSI is making higher lows. Two drives typically gives you a shot to the 21, which that move is already played out. So essentially what I'm looking for is another lower high on Bitcoin. And I had to mediate that with any kind of a tick above here, 16.3. Again, probably going to get a run right at the 9 exponential. And, you know, potential moves up to the 17.5 region with any kind of a daily closure back above 16.5. That would be the pivot for me on the daily time frame to look for a little bit of upside continuation. So I'm just going to mark that off there and kind of set up the box of peace and prosperity or death and despair. And essentially we want to see, you know, Bitcoin reject right from these levels pretty much right now. If we're going to continue to play out the downside move, daily Stokes will cross up today above 15,992. So, you know, sitting on the edge here at 16,888 on the daily time frame. What else do we have happen here? The 5-day time frame did cross down and continued with its consecutive closure down. Volatility is beginning to expand. We're above the 20 percentile. We took out the highs. And essentially what I would expect is continuation based off of this candle. However, you can see the seller volume is waning here. And any kind of a tick above 17,000 is likely going to lead to that greater move all the way up to 17.8. And so the question is, are we going to play out some sideways action over the holidays, or is it going to be a bit of a doomed drop over Thanksgiving dinner? What's the conversation going to be like over the turkey with your family about cryptocurrency? Everybody's going to be asking questions. I know that'll be the case for me, and pretty much I'll be doing my job on Thanksgiving. All right, so I'm really not sure, and I'd say it all hinges upon this factor, Mr. Good old US dollar, which I'll be returning to, and kind of looking at the higher term time frames, which after a candle like that, you know, typically going to get a little bit of a follow through after some backfill. So we're backfilling, retesting kind of the breakout level, and I'm expecting extension up to 108 at a minimum. Dollar's been bullish all year, and hidden bullish divergence would be a continuation of the trend. So you would expect pretty much a greater move, as this was confirmed as a, excuse me, so that would be 1, call it 2. I mean, we're talking about a slew of drives of hidden bullish divergence on the daily time frame. So I'm gunning for a run actually up to this green box. And if we do not clear that, if we put in another lower high, well, it would be continuation of the trend to the downside, and which that essentially is what we are now in, a daily downtrend. We got lower highs and lower lows. What about on the weekly here? And based on a candlestick basis here, we do have our first lower low, lower high, yep, on the weekly, but clear stop and reverse points. I would say this is just another higher low. So we got higher high, yeah, higher high, higher low. So still in an uptrend on the weekly time frame. What about on the monthly here? And we did talk about this earlier this month. Any kind of a tick below that green box got us a shot down to the 9 exponential. However, the monthly does have a few drives of hidden bearish divergence, and moves can get all the way down to about 101.65. So as I've been suggesting over the past week or so, saying, hey, look, any kind of an upside move in the dollar is going to hurt Bitcoin more than usual, as the last bit of dollar decline, Bitcoin really didn't see a bounce. In fact, it went down. So kind of a little bit of a nuanced interpretation there. I do think the dollar is still macro bullish as long as we're making higher lows and higher highs on the weekly time frame. So that gives us a macro kind of, view that risk assets are going to be under some stress and under pressure over, the next at least 6 months. So the main idea here for me in my position is I'm looking for lower high. So in a downtrend, you want to sell the lower high. Sell the lower high. And now that we've kind of had a bit of a call it a capitulation event, call it a black swan event, call it whatever you want to call it. I call it a 20% move to the downside. More like 27%. So we did make a new all-time low, but the lowest candle close for 2022 was yesterday. So volume again is beginning to wane here, and let's take a look at some of the underlying market dynamics. Open interest is ticking up slightly, so 6.4 billion today. Funding rates are slightly positive, so paying to go long right now. Economic data coming out, and what else did I want to talk about? Funding rates. No, not funding rates. The fear and greed index. That's what I wanted to talk about really quick here. We're at a 22, and again, a major capitulation event typically happens when the fear and greed gets extremely extremely fearful. We are still kind of hovering at the 20 line. We want to see that get into the 10 as kind of and hold there, for some time. You want to feel the sentiment change to where everybody is bearish on the market, and all the seller exhaustion has happened. So what else? Economic data coming out today, November 22nd. Let's see if this later. Okay. So manufacturing numbers, Fed speech today, and I believe the Fed minutes are coming out sometime this week as well. So I don't know why that's not popping up right now. November 22nd, Tuesday, turnaround Tuesday. Red Book of Selling, Consumer Confidence. Oh, these are coming out right now. I don't know how much that has weight. Yeah, nothing on high priority today. Let's see about tomorrow. Any economic data coming out Wednesday, and then everybody's going to be off for Thanksgiving Thursday. And the big question is, are you coming to work on Black Friday? I don't think I am. I think I'm going to work from home at least, and definitely keep an eye on the market. Bitcoin, oh, look at that, Ethereum Classic. So I do look at that as a bit of a bounce potential up to $19 at a minimum. We're at about $18.50 right now. So goose in the favor. And above 16,285. That's going to look good for a run. Yeah, all the way up to that 16.5. So that does look like a potential, and that would probably fill the gap on CMEs. Yeah, which is about 16.4. And there's still about $100 premium on spot price over CMEs right now. What else I want to take a look at? Doggy coin looks like it is taking a leg up, and wants to pop back up to that 9 at 81 cents, but could potentially reverse here if Bitcoin does want to take another leg down. I do think at some point Doggy is going to come down and test this trend line, probably maybe somewhere around here. But if it does, likely to bounce off that level. Again, not financial advice, I'm not a financial advisor. And what else do we have? Ethereum, that's another big one on people's eyes right now. And I would say this for Ethereum, a good place for a stop at about that 1147 mark if you are in a short trade. But looking for lower highs to come in somewhere around that green box if they are going to happen. What else I want to see on the 4-hour time frame? We'll close in 2 hours and 56 minutes, and we will have a drive, one drive of that hidden bullish divergence. Again, price making a lower low, slightly, just slightly lower low on the 6-hour, and a higher low on the RSI. That gives us a drive, one drive up to the 9. Is there another drive coming back somewhere? That would be, yeah, looks like a little bit more of a bounce is in play here than not. And where do potential bounces come up to on the daily time frame? You'd expect that lower high to come in right at the 618, somewhere around 1174 if it is going to be a bull trap. Okay, last thing I want to touch on, gold and silver. I know a lot of people are looking at gold and silver right now, given the economic conditions, and wondering, is gold going to break back into the range? All depends on the dollar. If the dollar starts making new all-time highs, I'd expect gold to hit that 1450, right? So if you see the US dollar start to take out these highs at 113, 114, that would be probably your best indicator that gold is going to cool off for a bit. Gold should be doing some cooling off if that happens. And what else? Gold, yeah. So that's the thermometer for gold. Silver, that's not it. Silver's kind of in a peculiar place as well on the weekly time frame, rejecting the green 55. And this does kind of look like, hey, just another lower high, bearish divergence, and any kind of a closure below 2065 to this week. We'll put in a third drive, and I'd expect a run back at the bottom side of the range if that breaks. Next target down we've been looking at is in the 14 to 1250 range. So that, again, if the dollar, silver does whatever gold does, but more. Typically, that's kind of the rule of thumb. Gold leaves, silver follows, and then you'll see, some of the other currencies. Brazil's kind of an odd one, holding its own. Looks like the euro is going to come down a bit more, goosing the favor in the dollar going up, and the Japanese yen already playing out its pullback to the 9. So does it have potential for more? We'll see if this confirms as a high. So closing here anywhere lower, I'd expect a run back at the lows, and that would be going into probably next week. Markets are going to close on Thursday. I believe they're open Friday. I don't know about the currency markets, actually. And what about Brent? Brent also hanging in at $90. Brent goes up, inflation goes up, and all those, the best returning companies were energy companies, ExxonMobil. I know that, Warren Buffett taking huge stakes in some of these oil companies, because they're profitable in the good and the bad times. Those guys are always making money, and we have a need for oil, that's for sure. So Brent does look like on the daily time frame has, had a few drives of hidden bullish divergence. Did it already play out? Rejecting here. It's a higher low and a lower low. Nope. There is slightly there. So it looks like Brent wants to bounce, maybe back up to $94, $95. But other than that, it's just lower highs. Anything below $100 a barrel is going to be, downtrend confirmation. However, this would be your first higher high, higher low. Yeah, that's now a lower low, so you'd expect a lower high. Oil kind of rolling over. Interest rates, bond yields still way up there. 2 years at 5.5%, 10 years at 3.7, that came down quite a bit, and the 30-year at 3.86, everything came down, having a bit of a reset alongside the dollar. And macro trend is up, and the federal funds rate, they're talking about it this morning again. I was watching the San Francisco Fed. Mary Daly was talking about, hey, look, the same thing, the same exact thing. They're going to keep the terminal rates at 5% for 12 to 18 months. So you imagine what that's going to do to put pressure on the economy to essentially suck the liquidity back out of the market and bring down inflation. So terminal rate for 12 to 18 months at 5%, that's, or give or take 15 basis points. So that puts, mortgage rates at 8% for, 12 to 18 months. And you're just starting to see the, housing sales slow. You haven't really seen prices come down. So that's part of the unwinding effect, which I expect probably happens, first quarter of next year, and after the holidays and after all the spending, the last little spending push, and people max out their credit cards for the holidays. It probably takes another 9 months before, maybe 6 to 9 months, the real recession hits. And now they're talking about potential depressions. I don't know. I don't want to get too ahead of myself here, but I do know this, that, the NASDAQ and here's the 6 month time frame. Are we getting follow through yet? So this is the NASDAQ 6 month bearish engulfing candle. Same thing on the S&P 500. This thing is never not led to downside continuation in the macro for stocks. So we're talking about 6 to 12 months of down at least, if not more. I'm imagine the last bearish engulfing candle was 1973, 10-year bear market. The one prior to that was 1929, the Great Depression. We had a 20-year bear market. So not looking forward to what comes after this. And this 6 month will close at the end of this year. So slower moving time frame, but very, very powerful, giving us, again, goosing the odds for downside bias over the next 6 months.